Hello, everyone. Welcome to a brand new episode of One Vision. This is Theo, your host for today's episode. Now, we have been starting a new trend, and I like to continue that forward. And so instead of me talking to one person, which likely the other person would get very bored with me, now we have two guests on this show. Joining us in the studio today is Alex Matjanec, founder and CEO of Wysh, alongside my very good friend, Jim Perry, who has made numerous appearances on the show. Welcome, gentlemen.
Hey, thanks for having me.
Absolutely. Glad to be back.
You can't get rid of me, Jim. Sorry, you're stuck. You're stuck for a while. Let's start with you first, Alex. For those who might not be familiar with you and your company, can you tell us a little bit more about your journey and what inspired Wysh?
Sure. Well, I'll kind of highlight right off the bat that Wysh is actually a life insurance company. And so we're already a little bit different in this world of insurtech and fintech in that way. But I'll hit the point of it. What inspired me, it kind of builds off my career of building financial businesses throughout the 2010s. And what I noticed through that period of time was as technology was making things more accessible and easy access, people were able to trade for the first time. People were able to do more mobile banking and engage with those institutions. Protection was like missing through that story. And so when the opportunity presented itself to kind of start my next venture, I really wanted to attack the concept of protection and how to bring that back to the forefront of institutions. And I'll kind of end on that one point, which is I had an opportunity to speak to an institution just recently, and I talked about stability and the importance of stability. And they were like, well, people choose us because we are stable and that's what we represent. And then my immediate response to was, well, how are you leaning into that further if that's why they're choosing to you? And I think it just really highlights that we all want more protection. And I think that's kind of what drives me every day and what led me to start Wysh.
I have so many comments around stability. I think even on a macro level, we all crave stability. But the reason why I think that particular point is important is because Jim, our wonderful friend, that's precisely the audience and the circle that you work with, right? Credit unions, community banks, mid-tier financial institutions that look for that extra step to provide, extra service to provide to their members. And it seems like this is something that would fit precisely with that audience. As a matter of fact, this is where I would like to credit Jim and our other friend, Stessa, for actually telling me about Wysh 2 years ago. They grabbed me like literally in the middle of the show. They said, Theo, you need to check out Wysh. You need to check out Wysh. This is like amazing. It's very different. Have you talked to Alex? And so I've been on a relentless pursuit of Alex for the last 2 years to try to get him to come on the show. No shaming here. But Jim, so I want to ask you, throughout the many years that you have worked with financial institutions, is that something that you had seen? It seems like, at least for me, it seems like a really new, different way of thinking about life insurance before we go into what Wysh does.
Oh, it's incredibly different. And Theo, again, thank you for having me on this conversation today because, I think about the very first time that you and I talked. I mean, you may remember that my professional career actually started in the not-for-profit world. And that's where I really learned the importance of mission-driven work. And over these past 20 years, working with community banks and credit unions around the country, one of the things that I've seen so many of them wrestle with is, on the one hand, how do you create a customer experience that reflects a purpose, that reflects a mission, that reflects something larger than simply being focused on profit. But then more importantly, how can you continue to add value at a time when all products and services are largely commoditized? How can you actually support your customers in ways that are going to provide increasing value, not just set and forget? So when I first met Alex, when I first learned of Wysh, I thought, oh my word, this is brilliant. We have to tell people about this because it's such an incredible value add.
Yeah, Alex, Jim has been one of your biggest advocate, if you will, in our circles. He talks about you guys all the time. So let's go to what you provide then. When we dig a little bit deeper on the stability, you have what you call a life benefit product. And I think that was the first time when I came and start looking at what you guys do. Can you walk us through what exactly it is and why, of all the things that we could do, right, with insurance, which is an absolutely not really sexy thing if you think about it, but is necessary, why do you choose to innovate with an embedded product?
Yeah, and I think it kind of, first of all, let me take a step back and say, Jim, those kind words were amazing to hear, and I really appreciate it. And he has been an amazing advocate of us, and over the time, it's been amazing to have those connections. But I think the best way to quote why this is important when it comes to embedded insurance is something I learned really quickly when I got into this space, which is we as Americans, and probably many people around the world, but definitely in America, we don't hate insurance. We hate paying for insurance. But if you give it to us as a benefit, if you ingrain it into our day-to-day lives, our what I call love mark connection to it and the brands that provide it to us are extremely strong. And we see this all the times when you look at people who talk about their credit cards, which is probably one of the only times people talk confidently about insurance. They'll say, you'll be with your friend and they'll rent a car, and they'll be the person on the other side of the counter will be like, hey, would you like to get our daily insurance rate? You'd be like, no, my credit card gives me that. And you'll turn to your friend and be like, see, that's a cool feature. Nobody ever says that about insurance. But why is that? Because proactive protection that follows you along your journey is how you build a deeper connection and really help support you in the time that needs. And that's ultimately was that thesis is what led us to create Life Benefit. And what Life Benefit is micro protection in the form of life insurance that sits within depository accounts. And so those are checking accounts, savings accounts, CDs, forms of brokerage accounts. And as we as individuals are working hard to become financially independent by growing these forms of financial products, we know we need protection along the way. It's just a secondary thing that we're focused on. We're trying to get to retirement. We're trying to have enough money to buy that special thing we want. But we know that unfortunate things happen in our lives. Things disrupt our path to success. That is what life insurance is there for. And how can we reward people as they're making smart financial decisions? And so if you were to open an account at one of our financial institutional partners, and that account had Life Benefit, as you're growing your savings, you're growing a no-fee, free life insurance policy along with it, worth a percentage of your account balance. And then if something were to happen to you and you were to pass away, your loved one now not only gets your account balance, but additionally that boost in the form of a micro life insurance protection. And for us, that little bit of protection builds off of that initial goal, which is how do we make people feel more stable as they're working to become financially independent?
One of the things that I really appreciate about that, Alex, is first of all, at a time when we could be seeing significant increases in the cost of health insurance for many, many Americans, one of the things I know from our work doing focus groups, all the rest, is you hear from people all the time that when they are pressed financially, the issue of any kind of life insurance, that usually gets jettisoned. That's the thing. They have to deal with the immediate. They have to deal with those necessary things, the everyday cost of living. And so now especially to be able to offer a product that goes far beyond the classic kind of thing that we've seen from the financial services sector for so long. Here's a $2,000 accidental death and dismemberment policy as part of your credit union membership. It's like, no, that's not immediate value that they can actually link to their deposit account to actually see kind of the growth opportunities and draw them in. It's a brilliant way to add some stickiness to the relationship, because the consumer relationship, because you're actually adding value to their lives.
Well, there's a quote that Jim uses that I happily reuse all the time, which is, you can be doing good and making money as an institution at the same time, right? Doing good things can be profitable. And we are really excited to be able to showing that. And the thing I would say too, that I learned about the insurance world, specifically in life insurance, is it's one of the only categories that I know of that people will raise their hand, ask for help, and you will be turned away from being able to purchase that product, right? Like there's actually customers who are like, we don't want your business. Okay, what are these people stuck to do? And so life benefit is the most inclusive form of life insurance available in the market today. There is no underwriting, there is no opt-in. As long as you're allowed to open that account at that institution, you pass their standard onboarding process and that account has life benefit, you are earning this protection. And you highlighted, Jim, about how a lot of things that are important to people on their laundry list as they get into financial struggle situations, they go away or they become even secondary or third, and right. But they doesn't mean it in their mind. They haven't forgot how important they need. They know they need this. It's just they can't check all these boxes. And the unfortunate part about life insurance in particular is it's one of the most common benefits that people get through their employer, right? If you would look at 90% of people who purchase life insurance, you would ask them, how do they get it? It would most say, oh, I have it through my employer. Well, that benefit over the last 20 years has gone away by more than 30%. And if you're, in fact, you're not in a managerial role, in many cases, director role or higher, the access to that benefit is less than almost 25%. So the most common way that people used to get this form of protection to check that box is now no longer available to them. And they're having to go through traditional means, which puts you into more traditional underwriting, which in many cases, 40% of you, unless you're willing to do full medical underwriting, chances are you're not getting approved anyways, or you're not getting favorable rates. And so while life benefit's not going to solve your job of your protection of your future wealth, it is the power of micro protection, which is chipping away and giving you access to these things and helping you on that journey. And then eventually, hopefully getting you in a position to then buy comprehensive protection if you need it. And from the institutional and partner perspective, who we sell this product to, we think it can help their deposit economics and bring true value to these institutional partners, to these customers as well.
I like your point about, it's not going to solve all the problems, but it does help to chip away some of the challenges that consumers face. And to your point, Jim, especially as all of the financial burdens and obligations for everyday consumers are increasing, now even more than ever, we need out-of-the-box thinking, right, to help consumers address the various challenges that they face in their lives. I do wonder though, Alex, earlier you talked about, this is coverage that, you don't need to opt in, you don't need, underwriting, you don't need to check. As long as you are able to open an account with your partner institution, they can automatically get the benefits. It seems a little bit different than typically how we think about insurance. How do you, in the early on part of the journey, how were you able to convince, financial institutions and partners that this is a viable option?
Yeah, so obviously for those who aren't aware, and I've learned the hard way as being this entrepreneur, insurance is state regulated versus federally regulated in America. So that means each state has their own rules of how you can distribute insurance products. So it did take us 18 months to design what is life benefit today. We had to go and lobby with state regulators to get approval of this product because I'd never seen it or heard it before. But why did first off the bat did these regulators approve it? Because again, we were showing them everything we're talking about here, this gap in the market and how it needs to be addressed. And this is a very unique way to address it. At the same time, we educated them and these institutions that, hey, banks, credit unions, you are becoming a sea of sameness. You all look the same. You're all competing against the same. This is why your cost of funds to acquire new deposits is consistently going up. This is why your net interest margin and the money you can make off of the deposits you hold is consistently going down because you are not differentiating yourself. Yet when you talk about yourself in the market, about this 360 model, about helping individuals as through their journey, you're leaving a key aspect from that story, which is protecting them along that journey. So we are showing them that this protection gap that exists in America, and just to give context, over 100 million Americans are underinsured. And these are not just low middle income people. These are very affluent individuals as well, because their priorities are set differently, that they need to be able to connect to them. So how do you take advantage of this protection gap and help your deposit economics in the same story? And that's how we've made people comfortable. Now, to your point of reaction to that, Theo, it's kind of been really exciting to hear individuals be like, this is kind of like magic. Like, I didn't think this was possible. How have you pulled this off? And one of the reasons why we've been able to design this product is really because of, for myself, spending 10 years in the banking world, building neobanks and fintechs, learning the intricacies of how things work. It allowed us to understand how we could piggyback off of existing banking infrastructures and inject ourselves in ways that don't disrupt the most important parts. And that's the reason why we were able to do it that nobody else was. It definitely came with institutional knowledge and someone interested in solving the problem that exists today. Now, when it comes to adoption, like any new idea in a very regulatory, risk adverse environment, it's a slow, painful process. And that's okay. And we are kind of chipping away at that. And they are having to find being institutional partners where we fit in their roadmap, because they had a very clear path, like buy now, pay later, get your paycheck 2 days early. We're going to build all these things. And then we kind of come out of nowhere and they're like, I didn't even think this was possible. And so now it's that conversation we're having.
Well, the one thing that I really enjoy about this particular product, more than some of the ones you just identified, like buy now, pay later, paycheck early, all the rest, it's taken a long time, especially for community-based institutions, to open their minds to this whole concept of how embedded products can spark better money conversations between the bank and their consumers. It's like this one actually has a real, benefit to your financial life in a way that's tangible and makes sense. And it's like, I get it.
Yeah, I think I'll add to the point. There's no, in my opinion, powerful way than showing people your money can work harder than when it grows protection along with you, right? If you want to be top of wallet, which all these institutional partners doing, same with credit cards, you need to add these benefits. And going back to protection and credit cards, I'll show you. So many credit cards put their benefits into tiers. Tier 1 would be cash back or low interest rate. Tier 3 is kind of VIP or airport lounges or access to restaurants. Tier 1 is all protection benefits, expense protection, travel protection, etc. But if you purchase, and our research has shown this, say in this case, a travel credit card, like you're getting a really specific credit card, that protection tier 2 becomes a tier 1 benefit to them, because they are specifically saying, not only do I want air mile points, I need protection that specifically targets that lifestyle. And that's kind of where we see the opportunity of looking at this audience, which is, again, this older millennial that has lived through financial crisis, pandemics, inflation, trying to buy their first home, right? They have been punished time after time again, and I am one of those individuals. And that is showing them that, again, resiliency and stability is what they matter more than moving money. And this is why, if I were to get specific here in deposit accounts, 60% of savers in the millennial space do not prioritize interest rates. Because if they care about interest rates, they're putting their money in the market. They're looking for their banks to help them be able to financially be stable and independent. Right. And I think credit unions, from a member's perspective, understand this very well. I think we're just showing them now how protection can really help them with their deposit economics versus being a bolt-on addition.
And a different way of thinking about it too.
And one of the things that Theo talks about quite frequently is how there's a lot of effort that's necessary in order to build or sometimes reestablish trust that has diminished between financial institutions and their customer bases over time. And so this, to me, seems like one path to kind of strengthen that bond of trust or rebuild that trust by actually having something you can offer to your customers that demonstrates a level of concern over their financial lives.
Absolutely. This is value creation instead of extracting value, right? And that's the one thing that our industry does really well on the latter part.
Well, to that point, one of the things I'm most excited about with AI, but I rarely hear talked about, is AI's ability to really move us from a product specific to a customer centric mindset. One of a company called Stash Invest, which was one of the founding teams I was helping build, they launched Money Coach, and data that they've shared has shown that 1 in 4 individuals who ask their AI money coach, like, am I diversified? What could I do better? How do I do things? Take action within the first 15 minutes of getting that data. Like, this is the point of being able to kind of help support people in this story, because we just don't know what we don't know. We need, and micro protection is giving you a little bit of here and a little bit of there. Coaching is helping you a little bit here, a little bit there. These doses make a difference.
If I might dare ask, aside from navigating the state regulation, which I remember, gosh, it's like maybe 7, 8 years ago when I was still in ARP, one of the founders I met, he's from Germany, he said it was far easier for him to establish an insurtech in Europe across border than it is for him to try to do that in the US. He's like, how do you guys get anything done? Not sure. But aside from that, what other challenges did you see or foresee or surprise?
Yeah, I think from our perspective, as an insurance company, there's 2 challenges. One is, as a startup, it can become really capital intensive to run a life insurance company. And we're fortunate enough that, I was partnered with Northwestern Mutual to bring this business to the forefront. And they've been a fantastic financial backer of us and believe in our vision, helping us push forward and leaving us to be able to kind of do things independently. But that's kind of taken some of the weight off of our shoulders to be able to focus on this case. On the other end, it was about designing solutions that are capital light, because while we carry the risk, and as a state regulator, it's interesting that, in the financial banking world, you have the FDIC insurance, right? And that's kind of like the banks pay into it, but the risk of the capital is being held by the Federal Reserve. In the insurance world, there's similar things that exist. Like, you do have kind of a state-based protection, but instead of paying a fee to states to be able to cover that protection, the states require us to carry the protection, which requires me to have $10 million sitting on the sideline just to be in business for the unnecessary risk, because there's over $2 billion of risk on our books. And so there's a balance there that we have to meet from a risk-based capital to model. So a lot of the challenge and effort that we've spent focus on is designing solutions that don't inflate that number over time as we scale our business, because we have to balance that as a startup as we work to grow to profitability and things along those lines. When I talk directly so when you put, that's kind of internal insurance economics dynamics. When it comes to our financial partners, it's been just consistently showing them how simple it is to add this product and display it. Now, unlike a lot of solutions that are out there, we do directly interact with their end customer. Now, we don't talk to them, but our end deliverable, that is life benefit, is most powerful when you display the protection that they've earned in the banking ecosystem. And as you can imagine, that creates very sticky deposits, because if they close the account, they lose the benefit. They're not just seeing their deposit go down, they're losing this thousands of dollars of protection along with it. It does create a little bit of a skip in the heartbeat for some of these institutions to say, I'm really going in hard on this to show this information to these customers. And I'm worried that if it doesn't meet the economic goals and we need to take it away, like any solution-based, we're going to have a little bit of a riot because you took this protection from them. And so the way we've kind of handled that is to kind of just teach these institutions that, hey, if you're going to be solution-driven, which you should be as an institution, that comes with transparency and honesty. And we help them draft an email and a letter that says, we've bought this protection for you. We care about your growth and you're supporting you on this journey. This is how it works. And if we see you using it, which means growing your deposits to grow that protection, we'll continue to pay for it. But if we don't see you paying for it or using it, we're going to stop buying it. We're going to use the money somewhere else. And that's totally acceptable. And I think institutions have to get really comfortable that is just saying that, like, we're testing new things. If we see you use it, great. If we don't, we're going to pull it. And some people will be upset. Some people will be understanding. But that's kind of that's been another challenge for us, is showing them that you can offer really forward-facing customer-touched products and not worry about repercussions.
Wow, transparency.
Imagine that.
Community banks so often worry about the complexity of these kind of partnerships. And so, sometimes I think the way you just described it makes it a whole lot easier for them to wrap their brains around what this kind of relationship looks like. You know, so many of them are so slow to move into these kind of embedded products, because they just think it's going to be too much work to work with you. Can you speak to that a little bit, Alex?
Yeah, I think one of the other forms of magic that I'm proud of in developing this solution is it takes less than 45 days to go live. And the key reason for that is the institution buys a policy from Wysh. So they buy a life benefit policy. We issue the policy to them, and it comes with a one-page disclosure describing what the benefit is. And then they take that disclosure and they amend it to their existing agreement, or they link to it on some page. And at that point, that account, all customers have access to that benefit. And then if you, again, I use the example where everyone here probably has a credit card that has protection benefits. You didn't have to go out of your way to get it. And if you go look in your terms on page 128, it describes the benefits that you have with whoever insurance carrier that credit card company partner with. Similar kind of aspect. So that's the simplest way, and that they can immediately start talking about life benefit. Many of our partners will go out there and start doing that before they've even been able to launch the user experience in their digital portal. The actual digital support, we've integrated with Jack Henry's Banno infrastructure. We're integrating into Q2's infrastructure. We're currently working in Fiserv, and we're working on CSI and some of these other partners. You know, I'd be honest with you, a lot of these cores require us to bring a banking sponsor. And so some of them we are kind of blocked by having a partner who wants to do that. But on the other end, we have an actual separate portal that they can hook up to very simply to allow customers to learn more about life benefits. Some of our institutional partners just do that as well. But all that being said, it takes 48 hours to issue the policy and add the agreement. And then the other 43 days is just launching the actual forward experience and training their customer service team on how to speak to life benefit, because again, they are representing this benefit. But we've now launched with 5 partners, and consistently it's taken less than 45 days. So we're really proud by this, and we do believe this is a normal process that it takes. And I highlight that, Jim, and I think it's a really good point you're bringing up, is because when you're looking at your roadmap and you're like 6 months or 2 years and all these things that could take, what are you doing in that time frame to differentiate yourself or help you towards your goals? I hear a lot of institutional partners say, hey, I'm trying to add 30 million in new deposits, or I'm trying to grow 3% year over year in new deposits. And I'm like, great. We are the simplest, fastest way to do it, outside of maybe buying Google or Facebook ads, right? And so let's go. And it's just, again, for them, we break a lot of the norms that is this normal onboarding of financial or fintech or any digital partners. And it's kind of been to our detriment in some cases. And we're having to kind of still break through that way. But I'm happy we are as fast as we are.
That's amazing. Now, I do want to touch on one thing that I know is very passionate in terms of what Jim does, and I know that's also something you started, Alex, is the National Alliance for Financial Literacy and Inclusion. Tell us a little bit more.
Jim, why don't you introduce? I'd love you to take the lead.
Oh my gosh. Well, how long has it been now, Alex? Year and a half?
Just over, yeah. And I will say this, it was Finovate of last year, actually, when I was like, hey, Jim, I think this organization's going to start. We're going to be the founding sponsor of it. Year would be perfect for it. And Jim was nice enough to jump in and really represent, and he's been doing a tremendous job. But, you know, it's as much as I'm happy to be the one funding it, it's Jim and team's baby. But go ahead.
Well, as you both know, I mean, in my role as a strategist, I'm a total data geek. And so I'm continually looking at information from markets all over the country that shows the degree to which we've got a lot of low to moderate income households right now that need information. They need support. They don't need just a little like blurb on a website. They actually need partnerships. They need their community-based institutions. They need their banks. They need corporations. They need everybody to come together and help support their own financial literacy, their own financial wellness. And so, of course, a lot of community-based financial institutions, community banks, credit unions, they think they've been doing this or been kind of at the edges of it for a long time. But one of the things that we've seen post-pandemic is our needs as consumers have changed, have shifted. we're looking for new ways to feel supported in our financial goals and our financial futures. And so when the concept of an overarching organization, a not-for-profit, that would be focused just on building this alliance, building this coalition of, again, community-based institutions, community banks, credit unions, to come together and really make a dedicated effort around financial literacy and inclusion, I was all in.
Yeah, and I would say from Wysh's perspective, our core mission is a belief that every individual will be able to achieve their financial independence quicker when they have a little bit of protection baked into their lives. And on our end, what we can do best is design, distribute financial products that bring protection to the forefront. That's what we've had a lot of time speaking about, why we're so proud of the life benefit. But it's only one side of the same story, right? The other end is education. And we believe ourselves as the tool, as Jim and his team and on that board of NAFLI are the story that is being told. And that's kind of why we are excited. And that's why we chose to found this initiative from a sponsorship perspective to help us on that side while we focus on the other. And collectively, we think it will help us achieve Wysh's mission and bring that level of protection to that financial independence.
One of the things, too, that NAFLI is really focused on, I think, I've seen kind of the value to community-based institutions when they lean into financial literacy and providing solutions that actually meet people where they are. Because, again, so often in an effort to grow, in an effort to scale, financial institutions kind of offer this one-size-fits-all kind of approach to everything that the consumer needs. And what we're really understanding is we can't work that way anymore. You know, we have to understand there's a broad spectrum of financial needs and levels of financial wellness. And we've got a lot of people talking about that, but let's bring them all together and find greater solutions and find ways to actually elevate these conversations so that we're not leaving any people out. You know, the thing about Wysh's life benefit and that I got so excited about was that it demonstrates that innovation and inclusion aren't separate paths. And so through NAFLI, I think what I'd also like to see is that it inspires all these organizations that get involved with us to actually lean into innovative ways to keep finding new solutions. Not just Wysh's life benefit, but there's so much more that could be done to improve the financial wellness of consumers around the United States and around the world for that matter.
Yeah, I'll just add a few data points, and I can't remember which publication posted this, but I think it sums it up really well, Jim, to your point of helping kind of these institutions find that need. So over 70% of executives at financial institutions said in 2025 and 2026, to achieve our business goals, we must introduce financial literacy wellness tools to our story. At the same sense, too, their customers, 80% of them plus said, hey, we need these tools. We're looking for these tools. And then somewhere something happened, and then they put these tools out there, and then they asked their customers, and less than 14% of customers now today say the tools that they're getting access to that are supposed to achieve those goals are actually doing what they're looking for. And then ultimately the end result is financial institutions aren't hitting their goals. They've upset because they spent a lot of money, and customers and Americans are frustrated that they're not getting any financially better. So this gap still massively exists, and it needs to be addressed. And to your point, Jim, while Wysh is coming from one point of view, NAFLI is helping to broaden that conversation from a bigger point of view, because we can't solve this on our own, and there needs to be an association that's trying to do so. And we're really excited that they're focused on that.
I like the mission. I like what you guys are trying to accomplish. And Jim, to your point about we can't have one size fits all resonates a big deal, because that's what we keep telling people. If you think about older adults, those who are older than 50, they don't all need the same thing because they are not all alike, right? It's not monolithic group. Same as those who are millennials or Gen Zs, they are all different. So kudos to you guys on that. And before we close, I do want to ask, so what's next?
Go ahead, Jim. Anything on your end before I jump in? On the NAFLI side?
Well, on the NAFLI side, obviously, we're in the process of trying to let people know that we're here, to make sure that we're inviting people to get involved, to sign up for the information that's coming from NAFLI, to help support institutions and organizations alike to do more and to provide different levels of information out throughout their communities. So anyway, just look us up, get involved. That's our biggest work in the near future, is just making sure people know that they're invited to participate and get involved with us.
Yeah, it's amazing. And on the Wysh side, maybe I'll leave on this point, which is we are a country of uninsured. We don't have enough life insurance. We don't have enough home insurance. We don't have enough pet insurance. We definitely don't have enough auto insurance. And we as individuals are fully aware of this, but we do what we can and we move forward. And so from Wysh's perspective, it is constantly helping people move forward on that journey. So our product roadmap is specifically focused on how do we chip away at the uninsured aspect of the market. We're not going to make people fully insured, but we can make it part of their journey and story. And so we're just getting started with life benefit and micro life insurance. And there's an opportunity to move into income protection and other forms that people consistently deal with on their day-to-days.
I can't wait to see what's next with both of you. Until then, thank you so much for joining us on the show, and tell us what's new, and more importantly, spread seeds of hope in days that sometimes they elude us. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision. We'll talk to you next week.